Good morning and welcome to the Revolution Beauty Group PLC investor presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you to Lauren Brindley, CEO. Good morning to you.
Good morning everybody, and thank you so much for joining us this morning. I'm Lauren Brindley, the relatively new CEO of Revolution Beauty Group, and I'm today joined by Neil, our CFO, who will also speak to you in a little while. So over the course of the presentation today, I'm going to talk about the Revolution Beauty business model, our great portfolio of brands, and actually what makes us very different. I'm also going to recap on the strategy that we launched earlier this year at our Capital Markets Day and provide an update on the important progress that we've already made so far. Neil is then going to talk you through our most recent financial results for the full year ending February 2024. So let's talk about Revolution Beauty Group. So Revolution Beauty is actually only 10 years young as a company. We actually celebrated our 10th birthday on the 28th of March this year. And we have already built an amazing global beauty business. In our last financial year, we delivered 191 million in net global sales, which was supporting a global retail business worth around 370 million globally. We are still primarily a makeup, color cosmetics business, driven by the success of the master brand, the first brand we launched, Revolution Beauty. And we've more latterly launched into skincare very successfully with the launch of our Revolution Pro Miracle Cream and its supporting franchise. And we also have some smaller categories in areas like hair, fragrance and men's, but these are significantly smaller and less global in scale. Now, we've launched our beauty brands across 75 global markets successfully, and this number is continuing to rise. Now, our products are designed with a Gen Z customer base in mind, and therefore we have a social media following of nearly 6.5 million, and that's really a testament to the strength of our brand with that consumer group. So let's talk a little bit about the unique capabilities of Revolution Beauty. So my background, for those that aren't aware, is 20 years in retail and beauty across the US, Europe and Asia. And having been in the industry and worked with all the major brands, including the L'Oreal Group, the Estée Lauder Group, etc., I know this business and these brands in particular have unique capabilities, and that is genuinely the reason why I joined this business. So let's talk about what I see, what makes this business very unique. So the first thing I want to talk about is the master brand, the number one brand in the company, Revolution, the brand that you'll see in Boots and Superdrug and around the world. Still today, that brand drives almost 80% of our group business, and it's what we're most famous for with consumers and retail. The brand has what I would call genuine brand power, and we know this, and we know with that brand power that it can be scaled across more countries and still more scale within the countries and within the retailers that we are already in today. So that's the first thing. The second thing is that as a business, we've actually built a unique speed to market innovation platform, which means that we're able to land new innovation, new product development for customers, from identifying a need or a trend to landing the relevant content or product within weeks. It's 16 weeks, which is much faster than the competition, from concept to landing the product on our digital channels, which is a very, very unique way and really is enabled by how streamlined the organization here is and how close to our community and our customers that we are. Also, we have an amazing team who are passionate. They're dedicated, they're very experienced in beauty, they're very diverse in terms of diverse backgrounds, diverse thinking, and highly, highly creative. And that really gives us also the opportunity to really make sure we're ahead of the competition. Additionally to that, you may not know, but we actually have our own in-house manufacturing, which enables speed, our innovation, and can be used to build improved margins as we scale. So this is actually a skincare and clear liquids factory that we have in Kent in the UK. Additionally, what's also unique about this business is we've built strength in both direct to consumer and through retailers around the world. So we have about 10% of our revenue coming direct to consumer through our own digital channels, 10% from like digital pure plays, like the Amazons of this world, and then 80% from omni-channel retailers, which are always a mix between physical locations and their digital properties, and making sure we really show up in a 360 way. And then we've really built a truly international route to market for mass beauty brands with a combined business model of direct to retail and distribution partners that we trust in local markets. And that's really important because it ensures that we're bringing our business to life and our brands to life in a very relevant way locally. So we have the ability to scale globally, but make sure that we show up in a very relevant and local way. So now our strategy has always been to launch Revolution with the best mass beauty retailers in any market that we launched in. And this strategy has been very successful and is very efficient, as it means you're going where your consumers want to shop, both physically and digitally, and therefore we're concentrating the investment accordingly. And as a result, we've built a very balanced global sales profile, with a third coming from our home market, the UK, and the rest coming from international business, including nearly a quarter from the United States. This is all supported by a strong direct-to-consumer business with our own retail websites in Europe, the US, and Australia, as well as a recently launched Amazon first-party relationship and TikTok shop that we literally just launched just a few weeks ago now. And this image actually you see on the screen is taken from one of our Middle East franchise stores, actually in Oman. We have 2 of these already, and we have plans to open a further 5, with the next one launching in Riyadh in 2025. We're actually the number 2 mass brand across the Middle East, hot on the heels of Maybelline for the number 1 spot. So it just demonstrates to you that in some of the markets, really the power and the strength of the Revolution brand. And let's talk a little bit about our brands. So these are our main brands. Each has a very distinct identity and price point. And that's great to make sure that they all are complementary to each other. So first off, Revolution, which accounts for the lion's share of our sales. By listening to our customers' needs on social media, this is a brand that's truly built with and for our Gen Z community. It's based on values that channel the industry norms. It's got a real clear focus on quality, affordability, and inclusivity. The price point here is anywhere between £3 to £18, with our pro range at the upper end of that price point. And really, wherever you see Maybelline and Elf around the world, we have an ambition that this brand, Revolution, can also be present. And we already have lots of data points that demonstrates that it also competes very, very successfully when we are. The second brand in the middle of the slide is Relove. So we have Relove is a quality, very budget-friendly value brand. And this is really with prices ranging from anywhere from £2 up to £5 in sterling. Now, this brand actually has the opportunity to be much more widely distributed across the world in a different channel. So really looking at grocery and the discount channels, which honestly is a largely incremental opportunity for us here at Revolution Beauty Group, and one of the big opportunities that we have ahead of us for growth moving forward. And then last but definitely not least, on the right-hand side, we have iHeart, which is designed more for the younger Gen Z and Gen A, who are really venturing into bath, body, and their first kind of makeup products for the first time. And prices here range from between £4 to £15. Very fun, very fashion, very impulse kind of driven. So they're the main brands. So now let's have a look at a quick run down the business and what really sets us apart. And I want to spend a little bit of time talking about the strategy and our vision as the new executive for the business. So as I outlined at the Capital Markets Day in February, we have launched a very clear and refined strategy called Reigniting the Revolution, which is built to deliver long-term, sustainable and profitable growth globally. It was really clear from my investigations into the company when I first started, including speaking to leaders at our major retail customers, many of which I know, that the company had become a little distracted from what had made it so successful and disruptive in its early years. So what does that mean? Well, the business had done a few things. It really stopped focusing on that fast, disruptive NPD and innovation in its core category, makeup, color cosmetics. It had cannibalized the strength of that core brand that I talked about, Revolution. and had started launching smaller and less profitable brand variants. It had therefore, unfortunately, become a bit bloated with too many SKUs and too much stock holding, too much cash tied up in stock, which therefore had resulted in poor service to our major retail partners on the brands and the products that really, really mattered. And overall, because of that, progression with major customers had stalled, and it's actually started to decline in areas like the US that you'll have seen from the recent results. Now, the previous management team had rightly focused on relisting the company, stabilizing the financials, and starting to put in the right level of governance. But unfortunately, a gap had been created in the strategic growth plan, and innovation pipeline had emerged as a result. Now, my new management team, since we have all come into position, have quickly addressed all of these issues, and our new Reigniting the Revolution strategy provides clarity and focus on 3 major initiatives to get this business quickly back into profitable and sustainable growth. So I want to just walk you very quickly through what those growth pillars are. The first one is the master brand. So we are focusing back on the brand that started it all, Revolution. Now, with the removal of the unprofitable or less profitable smaller brand variants, we're able to focus those resources and investment into our most powerful brand, a brand that has significant global growth headroom for scaling. And as we've just seen, this is supported by Relove, the value brand, which we are pivoting back to be focused on outstanding value for money moving forward. It will also allow us to sell makeup into new retail chains all around the world. And then iHeart will focus very much on that younger demographic. Now, the second growth pillar is powering the core. So what do I mean by that? So we are a makeup and a skincare company, and we are refocusing on doing that brilliantly first. The company got distracted into other categories, and there is still so much opportunity for our number 1 and our number 2 categories to grow significantly around the world. So what have we done around that? So we've reinvigorated our NPD pipelines at speed in both of those categories, and we will be delivering double-digit sales growth in innovation from the second half of this fiscal year. So innovation's back, and innovation's going to be very powerful in those 2 categories. And then the last pillar is focused global growth. So what does that mean? That means ensuring that we deploy the right level of resources to where the biggest growth opportunities are around the world, including the utilization of that unique distributor network that I talked about a little while ago. And in particular, pivoting growth back in the US. This is the number 1 beauty market in the world. It's a market that I know very well, and we have a huge opportunity to win in the US if we get the strategy and the growth plan right. But we can't do any of those 3 growth pillars if we don't have the best team, a healthy balance sheet, and smart operations to service our customers correctly. So that's also part of the plan. Now, by concentrating on those 3 strategic growth pillars and those 3 strategic enablers, this should drive us towards delivery of our vision to become a top 5 mass beauty player by 2030. Now, to get from where the company was at the end of fiscal 23 to now, and then where we're going forward, we have had to go through a major transformation. So I want to just double click on that a little bit for you. So this transformation has been essential for the future success of the brands and the company, and it's progressing really well. And you'll see that in the results that Neil is going to talk about shortly. We are progressing very quickly through the exit of the unprofitable or less profitable brand variants, and those non-core categories that I talked about. We are going to have a short-term sales impact in the first half of fiscal 2025, as we're not going to be anniversarying those discontinued brand sales, but we will be pivoting back to growth in the second half of fiscal 25. Also, as a result of those changes, we're now holding significantly less stock than we did last year, because we're running significantly less SKUs across the world. And we've already been able to improve our service levels to over 90% with our major retail customers around the world, which is enabling us to start to have really positive growth conversations with them. We've also been able to reinvigorate our innovation pipeline, as I've already said, And we've relaunched the company's digital test, learn and scale, that 16-week process I was talking about at the top of the presentation. And that is already now starting to positively impact the business from this month. We've also moved 7 markets that we were actually running directly from Revolution Beauty back to working with distribution partners, because we can see that there are a few markets where we can actually accelerate growth faster by having a partner work with us on a local basis. And additionally, it helps us simplify our overheads and costs. Now, all of these changes are enabling us to get back to year-on-year growth in the second half of this year, as I said, and our team genuinely are very excited about the future of the company. So let's talk about the future a little bit more. So as I talked to the Capital Markets Day, and you'll have seen that, hopefully seen that presentation, our ambition is to become a 1 billion at retail, that's really important, a retail sales, a beauty brand business by 2030. Now, this would make us a top 5 beauty company globally in mass makeup. And you can see on the slide, we've got a very, very detailed and clear bottom-up build as to how we are going to get there by 2030. And I feel very confident in our ability to deliver on this ambition. And I'm really excited to see the progress already coming through as we're coming through our fiscal 25 kind of plans. So on that, I want to take a pause and I want to share with you a little video that really starts to talk about how this new strategy is actually already starting to deliver and come to life. So I think, can we please play the video? Brilliant, thank you. So hopefully, as you've just seen from the video, we are already making great progress. So the new innovation that we've just launched is performing exceptionally well, with this particular strong performance in the largest market in the US. And that's actually helping to significantly improve our underlying US retail performance. We are ready to launch our first new Revolution new stand and assortment with expanded space in the Australian market, and we're expecting strong lift in retail sales. Actually, we're already seeing it from right now. And this optimized assortment that you're seeing is actually going to be landed globally throughout the rest of fiscal 25. We've also just launched our new Amazon 1P relationship in the US, already seeing strong growth as a result. And obviously it's Prime Day this week, so we're very excited about that. And we've just launched TikTok Shop, which makes absolute sense for our Gen Z consumer, and the fact that we are already a top 10 makeup brand on TikTok most months. As I've already said, our core category, our makeup innovation pipeline and skincare innovation pipeline has been fully reinvigorated from the back half of this year. And we've also actually agreed new distribution for the back half of the year with Boots in the UK, and we're launching DM in Germany as well, with many more discussions for calendar 2025 progressing well as well. But this growth can really only be delivered, as I've said already. We've got to have a strong team, a financially stable platform, and the changes we've already made over the last few months really are setting us up for success moving forward. I have a new established, strengthened leadership team. We have a new independent board in place who are exceptionally supportive. We have already improved our service levels to over 90% due to the simplified and focused product assortment, and we have a target. We believe we can get that up to over 95% in the second half of this year. A much improved stock position that's driving further improvement as inventory turns as we're actually progressing through this fiscal year. We have a much tighter grip on our internal processes, especially around the financial, stock management and governance practices. So in summary, there's lots of exciting growth opportunities ahead. And I think with that, it'd be a great moment to pass you over to Neil, who's going to actually walk you through the financial highlights for the year that we've just closed in fiscal 24. So over to you, Neil.
Thanks, Lauren. Good morning, everybody. I'll take you through the financials. Moving on to the summary slide here. This slide shows the financial highlights for the year that ended on the 29th of February. And I'm really pleased that we achieved growth at the same time that the business saw a much needed return to profitability after a turbulent time. Revenues were just over £191 million, up 2% year on year. That was helped by a significant level of clearance activity in the first half of the year. Our gross profit margin improved by 5.8 percentage points to 46.2%, and our adjusted EBITDA came in at £12.6 million. That represented a turnaround of over £20 million on last year's loss. All other adjusted measures and statutory measures were positive, and we've reported a profit before tax of £11.4 million. We finished the year with £8.6 million in cash in the bank, and net debt was contained to £23 million. And that was despite high levels of cash exceptional costs. Overall, it was a great turnaround from where we've been and a great platform to build on from here. Moving on to the next slide, that shows our revenue split by business channel and by geographical region. You can see here that we saw strong growth of 9% in the stores business channel, which more than offset the declines in our digital channels. The digital channel is made up of our own direct-to-consumer business, as well as the online sales of Revolution products on other platforms. In the year, we saw a significant decline in our direct-to-consumer business, as along with other e-commerce businesses, we observed that customers returned to the high street as it was the first full year with no disruption from the COVID pandemic. And that was exacerbated as we reduced marketing spend and promotional activity to improve profitability in the online business. Sales on other platforms were in line with those of the prior year, and we're optimistic about the potential for our new Amazon first-party relationship and TikTok shops, which Lauren talked about earlier. On a regional basis, the UK showed a decline overall, but the stores business channel in the UK saw growth, while the digital business declined for those reasons I've just talked about. The US business declined 15% year on year, with less investment in marketing and new product development, along with challenges in achieving service levels. The US is a key market for the business, and we expect to be able to invest in the future and return to growth. And we're really pleased with the progress that Erin Cast, our US president, and her team have made since she started in December last year. The rest of the world region grew strongly throughout the year, particularly in the Middle East and Nordic regions, and that was by both expansion of retail distribution and growth in digital sales. The next slide shows our summary profit and loss account and how that return to profitability was achieved. The biggest factor was the increase in gross profit margin. You can see that gross profit was £12.5 million higher than last year. That was an increase of 16% year on year. The gross margin increased by 5.8 percentage points to 46.2%. That crucial improvement was a result of a few factors. Firstly, a significantly improved stock turn meant that we were able to sell products with less discounts than we have historically. Secondly, we were able to clear a lot of old inventory at a higher margin as it had been written down in previous periods. In addition, we saw that freight costs came down from relatively high levels. At the same time, distribution costs decreased 15% year on year as our reconfigured distribution network yielded operational efficiencies. Distribution costs as a percentage of sales were 13.8%, and that was a significant decrease on last year when they were 16.7%. Also, marketing costs were nearly £6 million lower than FY23. The net result of all these improvements was that we achieved an adjusted EBITDA of £12.6 million. That's an EBITDA margin of 6.5% and a significant turnaround from last year's £7.5 million loss. It's also good to see a positive adjusted profit before tax result after depreciation, amortization and impairment charges of £5.2 million and interest costs of £3.1 million. In the text box on this slide, you can see all the adjusting items and how they impact the reported measures to show an underlying level of profitability. The summary for this slide is that the company has shown that it has an underlying profitable business model. It depends on an efficient level of stock turn and effective marketing campaigns, but nevertheless, we can see the potential to improve profitability further in the future. Turning now to our financial strategy, I've already talked about the first element and how we've returned to profitability. The second element is about balance sheet and cash efficiency. On an underlying basis, we were cash flow positive in FY24 thanks to the return to underlying profitability, combined with an improved working capital cycle as our stock turn increased. Back at the capital markets event in February, we spoke about how improving our stock turn improves our ability to convert profits into cash. And we believe that there's still a lot further to go on this, and we continue to expect to turn the inventory more quickly. The other vital element of the strategy are cost-saving programs. We're targeting £10 million of cost savings over the next 3 years, and we're making good progress with improvements in our cost of goods, efficiencies in our distribution costs, and a reduction in administration costs. That will enable us to fuel future growth. We're stepping up our investment in marketing, but we'll be carefully testing our approach to new marketing channels and media so that we can get the marketing mix as efficient as possible to then reinvest in powering the growth of the Revolution brand. So in terms of what that means for the current financial year, FY25, the impact of discontinued brands, product categories and SKUs will have a short-term impact on revenues in the first half of the year, and the year-on-year decline will also be impacted by the stock clearance that we saw in the first half of the prior year. So we expect to see a year-on-year decline in sales in the first half at a slightly higher rate than we saw in the second half of FY24. As the impact of the strategy takes effect, with a reinvigorated pipeline of master brand focused innovation, we expect the business to return to growth in the second half. With the cost saving initiatives kicking in and improved stock turn, we expect to generate EBITDA at least in line with FY24, with a significant weighting towards the end of the year. And with that, I'll hand you back to Lauren for the summary. Thank you.
That's great. Thanks, Neil. So as I think it's clear to see, our performance in FY24 is already reflecting a major strategic shift. The return to profitability is the result of that greater financial rigor, and we're going to continue to strengthen that more as we move through this year. Now, while we're at an early stage, we're already seeing those positive signs that the new strategy is beginning to deliver, and this will accelerate as we move through the second half of this year. We remain really confident and very excited in our goal of becoming a top 5 global mass beauty player by 2030. And I think on that, I'd just like to say thank you for your engagement, and we would be very happy to take any questions.
Thanks, Lauren. So we've got the first question, which is, when do you expect to return to growth following the work you have done to cut back the product portfolio?
Yeah, so great question. So we've already put out in our guidance that we're expecting a return to growth in the second half of this financial year. So by that point, we will have anniversaried the major stock clearance that happened in the first half of last year. In the second half of this year, we have a reinvigorated innovation and product pipeline. We have some new distribution landing, but we're making sure that we're ramping up our innovation and our growth in a very controlled and financially responsible way to make sure we're also driving those improved stock turns as well. So very clearly, the plan is that by the back half of this year, we will have returned to growth.
And the next question is, the £10 million cost savings plan that you have announced, can it be front loaded, or will you spread it out evenly over the next 5 years, for example?
I'll take that one. Yeah, I mean, the £10 million cost savings, what we've guided on that is that it will be evenly spread over the next 3 years. So accumulating over 3 years to get to £10 million of annualised cost savings. We're already seeing really good progress with that. So can we go a little bit faster than that? Hopefully we can, but watch this space. We'll update you as we go with that. But generally, we're seeing good savings on cost of goods, efficiencies in distribution costs, and we've significantly reduced the administration costs. But let's continue with the expectations of £10 million over 3 years. But really what we are trying to do is embed the transformation of the cost base as in the DNA of the business.
Thank you. And the next question is, the debt profile of the company at £23 million net debt is restrictive, especially with an EBITDA of £12 million. Do you have any plans to change this profile?
Well, I think where we are at the moment, the business is on a firm financial footing, and you saw that strategy. And I think that continuing the financial strategy is the best thing that we can do. So it's more of a self-help strategy where we can turn the stock as fast as possible, continue with that profitable operating model, and then also with an improved working capital cycle, we can create that fuel to be able to then invest in increasing the marketing costs, which then leads to more growth and more cash generation. So that's what we're continuing with that strategy at the moment, and hopefully it will be effective as it has been so far.
Thank you. And the next question is, do you have any update on the claims from Chrysalis?
There's not really an update to give there. We can't say too much about it, but what we'll say is that we're strongly contesting the allegations made by Chrysalis that you've seen, and we're continuing with our lawyers to engage with Chrysalis and their advisors. We'll make any further announcements about that case as they come along, but so there's not really an update there, but we're definitely very strongly contesting the allegations.
Thank you. And the next question is, what is the latest on the FCA investigation, and when do you foresee any resolution?
Again, there's not much to update there. It's difficult to say when the resolution will happen, but what we are doing is being very transparent, cooperating with the FCA as much as we can. So again, we'll announce any developments with the investigation as they happen, but at the moment there's nothing to update.
And the next question is, would the board consider implementing a policy ensuring the leadership team purchase a certain number of shares or encouraged to purchase shares over the next few years as part of their incentivisation?
I think we definitely consider options in that area. It's difficult for me to comment on and Lauren's comment on what is really a question for the remuneration committee. But what we definitely do want is that the remuneration for the executive directors is aligned with the interests of the shareholders, and I think that is really all we can say at the moment. But we'd obviously consider things like that in the future as we develop our remuneration policy.
Thank you. And the next question is, the Reignite the Revolution strategy focuses on the master brand and core product categories. How has this strategy been received by customers and retailers so far?
Yeah, so I'll take that one. So the major retailers around the world are delighted because, they see that the Revolution brand, has that brand power to be able to compete against the Maybellines, the L'Oreals, the Elfs of this world. And they want us to be innovating and to be investing in that brand that they know has the opportunity to drive them growth as retailers. So they're really delighted because I think they felt that we were trying to talk to them about all these other categories that we wanted to launch in their stores and all this other stuff that we were trying to do, and that we weren't really delivering for them what they wanted, which was really us driving growth in makeup in particular, which is really where they wanted us to play. And secondly, in skincare, where they feel there's such a big opportunity around the younger consumer who's really starting to enter skincare in a much kind of like early way. So, and I remember when I was with Ulta in particular, Ulta said, Lauren, you've got these power SKUs, you've got this power brand, we really want you to be driving and focusing and helping us really drive growth, because there's still so many customers and consumers that have never tried your products and how great they are. And so it was almost requested in a lot of ways by the retailers that we work with. So they're really excited. They're very encouraged. They're very excited about the new innovation that we're bringing through. And they're also excited because we're very much making sure we're focusing on our relationships with them moving forward. We're getting the right people, we're getting the right service levels for them. There's nothing worse for a global retailer than, having empty shelves for customers. I mean, that's the worst thing that can happen. So they're delighted with the fact that service level is back on track and that we're really powering up what truly they believe is our is what's going to help their businesses to grow too.
Thank you. And the next question is, gross inventory was reduced by 32% and stock turn increased by 47%. What were the key challenges in achieving this, and how do you plan to maintain efficient inventory management going forward?
I think that it was a very challenging exercise, obviously, because we built up close to £100 million of inventory, and so to reduce that down, we had to sell a lot of the old inventory. But the key thing was going forward on everything that we're buying, making sure that we're buying things with a view to selling it and being very realistic with what we were buying. And to some degree, that was done almost out of necessity last year. But now I think that the real big challenge is to make sure that we continue with that. And obviously, there's been a lot of changes in the SKU profile, but we need to make sure that we're getting better and better and better at the demand planning and demand forecasting, and that will manifest in that faster stock turn. So we've seen that go from a stock turn of once a year to double that to twice a year, 2 times per year. But I think there's still a long way that we can go further on that. but we need to get better and better at lots of different aspects in the business to keep improving that.
Thank you. And the next question is, does the return to profitability strategy include the provision of paying a dividend? If not, when do you envisage a dividend becoming payable?
We're not thinking about paying a dividend at the moment, so we're literally trying to reignite the growth of the business, get the business growing at the rates that we're used to seeing from a great brand like Revolution. So at the moment, it's generating cash to reinvest in marketing the brand, making the brand really strong, and reinvest in that pipeline of new product development. So we don't anticipate paying a dividend in the near future.
Thank you. And we just got our final question now, which is, can you share any upcoming product launches or innovations that shareholders should be excited about?
Oh, that's a tricky one, right? Because I can't let the cat out the bag too much, because we don't want our competition to find out. But what I probably can tell you is, you saw in the video, at the very end of the video, I did a little bit of a tease on skincare. So there's something really exciting happening in our skincare business in the first quarter of 2025. So that will land in this second half for our fiscal. And then the other thing I can tell you is that we've really relaunched that fast track digital innovation program that I talked about. And that's really vital for such an innovative beauty company like ourselves. And what does that mean in reality for customers and consumers? It means that every month now, moving forward, you'll see a new, we call it Revolution's Hot Drop, which is happening for essentially around pay week at the end of the month. So there's something really new and exciting and innovative now coming back from the group in our core category of makeup that actually launched this month. And you saw a couple of those on the video. So, really lots of great innovation, lots of fantastic creativity. And definitely the focus with the brand is making sure we are in constant conversation with our community, and they're telling us what they want us to create. They're asking us, they're telling us what their unmet needs are, and that we're responding faster than the competition. So lots of exciting things coming in the back half of this year. And, as we continue our conversations over the coming months, hopefully I'll be able to share some of those successes with you.
Thank you. That's the end of the questions, Lauren. So if I just hand back to you for some closing remarks.
Brilliant. Thank you so much. So I think then just on closing, I just really want to say, thank you so much for joining us today, for your fantastic questions, great engagement. I think, we really are very excited as an executive team and board about the future of the company. And I think all I would say is that we're really looking forward to future engagements like this with our important shareholder base as our transformation continues and the growth starts to accelerate. So thank you again for today. And any unanswered questions, we'll make sure that we find a way of responding to those too. Okay.
Perfect. Lauren, Neil, thank you for updating investors today. Can I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Revolution Beauty Group PLC, we'd like to thank you for attending today's presentation, and good morning to you all.